What's up, everybody? Welcome back to another episode of Zach Pasquarello going live every day at 11 a.m. until I raise $5 million in Zip Capital. I have $358,000. I actually think it's $359,000 because today is July 1st, which means we are halfway through 2025, which means I just paid out a couple of my investors from last month. So I pay monthly distributions in Zip Capital. And in this video, I'm going to talk about the difference between being a actual real estate investor, having long-term rentals, and private money lending, and basically why I decided to start with private money lending. So first, let's kind of go back in history a little bit. 5 years ago, I started a bookkeeping business. 2.5 years ago, I learned about private money lending. And so, to be honest, you need to have money to get started with private money lending. So if you don't have money right now, you have to get active income. You have to get a cash cow, golden goose, active income, cash flow. You need money to start private money lending. To start any other business, bookkeeping business, you could probably get a loan. You can probably bootstrap it. You can probably just work really hard. You don't necessarily need money to start a bookkeeping business, but you need money to start private money lending. So I ran my bookkeeping business for 2.5 years, and I've always been interested in investing and finances generally. So the stock market, mutual funds, that was always interesting to me. I liked mutual funds. I liked the stock market. I liked doing research, but I never really understood the stock market. It's very volatile. There's a lot that goes into it. Unless you really understand the companies that you're investing in, it's really just gambling, which is why mutual funds are great because they diversify your investment across the S&P 500 or whatever other mutual fund you might be invested in. So my retirement accounts have always been invested in the stock market. I have an IRA and I have a solo 401k as an entrepreneur. Before I started my business, I just had a regular 401k sponsored by my employer. But now that I'm self-employed, I have what's called a solo 401k. If you don't know what those are, definitely recommend look into it, do some research. I think I can contribute $7,000 per year to my IRA, and I can contribute like $20,000. So solo 401k gets complicated, but you can contribute anywhere from like 20,000 up to 65,000 ish. Those are just rough numbers. Those aren't exact, but roughly speaking, 20 to $60,000 ish that you can contribute to a solo 401k. And I'm sure there's information that I'm missing. I'm not a financial advisor. So I have my IRA maxed out at this point. Let's look back in history. Let's figure out why I decided to start private money lending. So business was good. I had emergency savings account saved up. I had my IRA maxed out and my solo 401k maxed out. So up until that point, if you're not there yet, definitely recommend get to that point. Start a business or get a job, climb the corporate ladder or grow your business, save money, invest your money in your retirement accounts. But then after that, what do you do? That's where I found myself 2.5 years ago. I found myself struggling to figure out what to do. And I felt like not too many people were talking about it. Everybody talks about the basics because that appeals to the majority of people. But what do you really do whenever you get to that next level? And so I knew about real estate. I thought about buying a rental property or I thought about trying to do a fix and flip. That's a lot of work. And that's not my area of expertise. In order to be a successful real estate investor, you have to find a good deal. And I was not confident in my ability to research and find a good deal. I'm sure I could have done it. I'm sure I could have learned how to do it and be patient, wait, find a good deal. I just didn't want to. And on top of that, I didn't want to manage tenants, vacancies, repairs and maintenance, just generally being a landlord, dealing with a family living in a house and potentially having to evict them. I didn't want to deal with any of that. With all that being said, I understand that real estate investing, long-term rentals, I've crunched the numbers multiple times. I'm pretty sure owning long-term rentals is in fact the better financial play. When you compare long-term rental to private money lending, let's just take, for example, $100,000. So let's say $100,000 would probably be a down payment for a $400,000 duplex, maybe. Let's call it a duplex. If you were to look at that $400,000 duplex and compare that to a $100,000 private money loan, because in both scenarios, we're starting with $100,000 cash. If you were to compare those two financial scenarios over a 30-year period, when you take into consideration inflation, interest rate on the private money loan, ROI on the private money loan, and then for the long-term rental, when you look at depreciation from a tax savings perspective, when you look at appreciation of the property, when you look at rent increases, rental rates typically increase on an annual basis. When you look at your mortgage not going up, if you get a 20 or 25-year fixed mortgage, when you look at potentially doing a cash out refi after 10 or 15 years, getting more cash and using that cash tax free for another investment, when you look at both scenarios, truly look at both scenarios, I will be the first to admit, I acknowledge long-term rentals is the better financial play, but there's more to it than just finances. There's also the daily tasks and the work involved to get started and to continue operating at that level. So my thought process was, I don't want to do all that. Honestly, I want to focus on my strengths. And my strengths, I realized, underwriting, analyzing, and marketing. And so I could find borrowers, I could analyze their financial reports and their tax returns, and I could analyze the deal that they present me. So I don't have to find deals, I just have to find borrowers, which I've already been doing with my bookkeeping business through social media marketing. So I realized that I could leverage my strengths, which I'd imagine are probably your strengths as well, which is why I'm continuing my YouTube channel the same, which is why I'm hoping to talk to the same audience, because I think this is very relevant to everybody who's trying to start a bookkeeping business, anybody who's an accountant. I think private money lending really applies to your strengths. So I was looking at the work involved underwriting, analyzing, and marketing, finding borrowers. And I realized that yes, long term rentals, better financial play long term, but the daily tasks and the work involved, private money lending seemed to fit my interest and my skills a lot better. So, with all that being said, I went all in on private money lending. And the final icing on the cake was this: from a liquidity perspective, interest rates were really high when I got started 2.5 years ago. They're still really high. So I thought, why not take advantage of the high interest rates and continue to lend? And then if interest rates drop, so people asked me this. They said, what do you, as a private money lender, what are you going to do when interest rates drop? First of all, the private money lending world is not necessarily tied to the traditional mortgage, the traditional interest rate world. There's not a direct correlation from what I've seen, from my limited 5 years of experience. Now, talk to me in 20 or 30 years, maybe I'll have a different opinion, but from what I've seen over the past 5 years, it seems like private money rates are much different and not directly correlated to national mortgage averages. So, with all that being said, I realized that I could take advantage of high interest rates right now. And then if I ever did want to get into real estate, if I ever did want to actually buy real estate, I still have my cash. Private money lending is much more liquid than long-term rentals. If I do a 6-month loan, I'm not guaranteed, but there's a very high likelihood that I'm going to get my money back in 6 months or less. If I buy a rental property, it would not be a good idea for me to try to get out of that rental property in 6 months. Ideally, probably not. So from a liquidity perspective, if I ever did, let's say in 5 years, an amazing $1 million apartment building comes up for sale, I could maybe buy it. I would be in a much better position to buy that apartment building in the future if I wanted to, or if I wanted to completely pivot and maybe buy another company or get into venture capital, whatever it was. I figured from a private money lending viewpoint that I would be more liquid. So that is why I started doing private money lending. I did not want to manage tenants and toilets and vacancies and repairs and maintenance. And so with all that being said, I'm going to go live every day from 11 a.m. to 11:30. My goal is to teach you what I know about private money lending. This is going to be a challenge. It's going to be a challenge for me. It's going to be a fun challenge. I love going live. I love talking on YouTube. I love sharing my journey, and I love radical transparency and honesty. So I'm going to be totally honest with you. I'm going to teach I'll be totally honest with you. I want you to invest into Zip Capital. But if you don't, that's fine. You can start doing your own private money lending. I'm going to continue making these videos regardless. So I'm going to continue making free content. I'm not going to make a course. I'm not going to sell you on how to start private money lending because I am all in on raising money for Zip Capital. And so I figured the best way to do that is to teach 100 people how to do private money lending. If 99 of you go out on your own and do your own lending, amazing. If I can get one of you to invest into Zip Capital, that's awesome. So there's a link in the description of this video. Follow me on social media if you haven't already, and go ahead and register on my website if you are interested in possibly investing into Zip Capital, offering 8 to 12% fixed returns to accredited investors. So accredited investor means that you have either a $200,000 of annual income if you're single, $300,000 of annual income if you're married, or a $1 million net worth. That's not my rule. That is an SEC regulation. My fund needs to remain SEC compliant. So in order for my Regulation D 506C fund to be SEC compliant, I have to follow those rules. Let's follow up real quick from yesterday because I forgot to finish some mistakes that you can make. So I made some notes and I forgot to finish. So let me just share this real quick. Some costly mistakes to avoid when you're getting started with private money lending. So here's a few mistakes: not sticking to your underwriting criteria, not tracking your draws, not setting up ACH origination, and having terms that are too short. Let's get into it. If you have any questions or comments about anything, go ahead and drop a comment in the chat of this live video, and I will do my best to answer everybody's comments and questions at the end. Not sticking to your underwriting criteria. Let me just check the chat real quick. Let me just make sure. Okay. Yep. Looks like we're live. You gotta make sure. This whole streaming thing, I've learned how to do it, but it still presents problems sometimes. Okay. Stick to your underwriting criteria. So as a lender, you might get a really good deal come across your table, and you might be eager to invest into it. But you need to come up with underwriting criteria when you're not emotional, when you're not desperate to deploy your capital, when you're clear-headed and not emotional. So come up with your underwriting criteria first. And if you need help, do some research. Maybe I'll make a YouTube video about specific underwriting criteria. Let me know in the comments if you want to learn more about my underwriting criteria. Come up with underwriting criteria and then stick to that. Stick to your underwriting criteria strictly. Don't deviate from that. If you, for example, I only lend in Pennsylvania, not gonna deviate from that. People ask me this: do you ever turn down deals? I had somebody today ask me for transactional funding. So what that is they're doing a double close. So they're buying a house today and they're selling it today. It's kind of like a different way that you can wholesale a property. If you don't know much about real estate, it's a whole different way of flipping houses, wholesaling. But doing a double close is a workaround because in some states it's against the rules to wholesale. In an old school sense, you can't wholesale anymore. So people are doing a double close. They're buying the house today and selling the house today. So somebody asked me for what's called transactional funding in Florida, and I'm not doing it. I could lend them $200,000 and I could make $4,000 in one day just doing transactional funding, just wiring $200,000 to the title company, and then I get my money back tomorrow. Insanely secure, so easy, such a quick way to make $4,000, but I'm not doing it. I'm sticking to my underwriting criteria for two reasons. One, it's not in Pennsylvania. And two, I asked this borrower for his tax return and he did not give it to me. So that is one of my non-negotiable underwriting criteria. I need to see your tax return. It's only 2023 tax return. It's just my criteria. I don't know why. Those are my underwriting criteria. That's what I decided will be a non-negotiable. For some people it's a phone call. Some people it's an in-person meeting. Other people it's I want to walk the property. Other people it's 90% of the purchase price. Other people it's $50,000 of cash reserves. Other people it's three successfully completed flips in the past 3 years. Everybody has their underwriting criteria. Everybody's different. For me, you have to have your taxes filed. And a big reason for that, one for two reasons. One, like literally logistically from a lien perspective, the IRS liens supersede any mortgages that I might put on the property. So if you don't pay your taxes and you owe $200,000 in taxes, and the IRS puts a lien on the property that you own. If I put a mortgage on that property, the IRS can come in and put a lien on that property and supersede my mortgage. And if you try to sell that house, the IRS will get paid back before I get paid back. So IRS liens, State Department of Revenue liens are no joke. I don't want to mess around with those. So you need to have your taxes filed. And number two, like that's like very clear logistically a reason why. But number two, I believe it just speaks to you as a business person, as an individual. I just feel like somebody not I understand there are certain situations where some people haven't filed their taxes for whatever I know there's a bunch of extenuating circumstances. But for me, I just don't want to lend to somebody who doesn't file their taxes. It's just what I've decided. I just feel like I just don't want to work with a person who does. I don't want to lend money to a person who doesn't file their taxes. Not that I think they're a bad person, not that I wouldn't be friends with them, but I just don't want to lend literally hundreds of thousands of dollars to somebody who doesn't take their taxes seriously. Just my personal preference. So, all that being said, stick to your underwriting criteria. I only lend to Pennsylvania. I require two most recent tax returns. I require bank statements and financial reports and pay stubs and a copy of your driver's license and LLC operating agreement, LLC articles of organization, scope of work, interior, exterior pictures, whatever that looks like for you as a private money lender. It doesn't really matter what your criteria are. Just make sure you have underwriting criteria and make sure you stick to your underwriting criteria. Number two, tracking your draws. This is a very specific thing, and I would not have known about this before I got started, but your draws. So you can do a rehab draw, sometimes called a construction holdback. So this is really cool. As a private money lender, you can lend, let's call it $250,000. So the promissory note is for $250,000, but maybe the purchase price is only $200,000. 50,000 of that loan is going to be held back in the form of a rehab draw or a construction holdback. I've seen it called both things. And so I will lend the borrower $200,000 at closing, and then I will reimburse them throughout the renovation process. So $50,000, let's call it $15,000, $15,000, and $20,000. 3 draws. So I will set up a draw schedule. So you will get the first draw, $15,000, once you've completed 35% of the renovation. You'll get your second draw, $15,000, once you've completed 65% of the renovation. And you'll get your third and final draw, $20,000, when your property is listed and active on the MLS for resale. And the really cool thing about the draw is that I charge, and all lenders do this, I charge points, origination fee, and interest on the total loan amount, regardless of draw status. So I am earning on a $250,000 loan, I'm only funding $200,000 of the purchase, but I'm going to get a $7,500 origination fee. 3% of the $250,000, even though I'm only funding $200,000. And then every month for the duration of the loan, I'm going to get $2,500 every month. So you can double dip. You can keep that $50,000 in your savings account and maybe earn 2 or 3% interest on that $50,000 and earn 12% interest on that $50,000 from the borrower. So it's a great way to earn extra money, earn extra interest on the draws. But with all that being said, you have to track your draws. If you don't have that money when the borrower requests that money, that's a huge problem because you're charging them for it. You promised it to them. So you have to track your money. You have to be very disciplined. As a fund manager, as a private money lender, you have to have the utmost integrity and extreme discipline to manage hundreds of thousands of dollars in your bank account, which is why us bookkeepers and accountants are perfectly positioned to be private money lenders because we track money professionally. We are professional money trackers. So you need to track your draws, especially if you have multiple loans, especially once you get $200,000 or $300,000. You have to make sure you have enough money in your bank account to fund rehab draws. Two more things, and then we'll get to the questions. If you haven't already, let me know your questions, your thoughts, your comments in the chat, and I'll do my best to answer everybody's questions. Two more things. ACH origination for monthly interest payments. So my borrowers don't mail me a check, but instead I get my borrowers to sign ACH origination, ACH authorization. So I go to my bank account, I get their bank account information, I go to my bank and type in their account number and routing number, I create their profile in my online bank, and then I schedule monthly interest payments. So every month I pull your monthly interest payment. You don't pay me, I basically pay myself through your bank. So I'm able to pull my interest payment every month. So I'm not waiting for checks. I'm not waiting for you to send me an ACH. I'm automatically pulling the ACH straight from your bank. Very cost effective. I think my bank charges me 5, 6, 7 cents per transaction. And the only way I'm not getting paid is if you don't have sufficient funds in your bank account. And so I also have written in my contracts that there is a $100 non-sufficient funds fee, not because I want $100. I don't want $100. I just want you to not miss a payment. So I make it a steep penalty because I don't want to deal with having to reprocess your payment. Like I don't want your $100. I would love it if none of my borrowers ever missed a payment. That's why I try to make the $100 hurt a little bit more so that they make sure, because a lot of these business owners and a lot of these real estate investors have multiple bank accounts. So they're constantly shuffling money back and forth between checking and savings and operating and payroll and taxes and income and all these different bank accounts, all these different entities. So I just want to make sure that you have enough money in your bank account so that when I pull my monthly payment, it goes through. I don't want to have to reprocess the payment and deal with all that. Last thing I'll talk about is the terms, 12-month terms, or 6-month terms, or 9-month terms, or 24-month terms. So I made the mistake in the beginning of making my loan terms 12 months because I just thought that's what everybody did. I come to realize that most people were doing 6 months with an option to extend. So when you're the lender, it's really been interesting being on the other side of the table because I've been a borrower all my life. I've never been a lender before, but as the lender, you have all the leverage. You can make up whatever rules you want. You have all the power. You have all the leverage. You can do whatever you want. So I basically tell people up front, flat out, like my terms are 6 months. If you're okay with that, amazing. Let's proceed. If you're not okay with that, unfortunately, there are 20 other borrowers who are okay with that. So it's just not for you. So similar concept, stick to your underwriting criteria. Also, stick to your loan terms. If a couple people are not okay with your loan terms, that's okay. Find 10 more people. If all 10 are not okay with your loan terms, maybe your loan terms are not fair. But if you can find 2 or 3 people that accept your loan terms, that's great. Don't decrease your loan terms or don't make your loan terms more favorable just because the first person said no. Just do a little bit more marketing. Try to find a few other borrowers who might accept your loan terms because I'm sure there's somebody out there. So when I got started, I was doing 12 months. And then I learned that most people are doing 6 months with an option to extend. So now I do 12% interest, 1% per month, 3% origination fee for 6 months with an option to extend an additional 3 months for a 2% fee. So if you borrow $100,000 from me, I'll charge you $1,000 per month, interest only, $3,000 upfront origination fee. And then if you go beyond 6 months, I'll charge you a $2,000 extension fee to extend beyond the 6 months. I have found most people are totally okay with 6 month terms with an option to extend 3 months. Okay, let's check out the the comments and the questions here. How many times do you follow up with people on Facebook when you DM them if they don't reply? If you do follow up, how often? So if I'm reaching out to somebody first and they don't reply, I don't reach out to them. I only follow up with people if they reach out to me first. Does that make sense? So if they reach out to me first, I'll follow up with them once a month. If I'm the one reaching out to them first and they don't respond, I leave them alone. I don't follow up with them. Do you use any type of CRM to keep track of who you sent DMs to? Johnny, no, I don't. Plain and simple, I don't. So in with Facebook, there's a way, and I'm not going to get too far into it, but there's a way to look at your friends, your recently added friends, and in Facebook, there's a way to see you can filter out by date that they became your friends. So what I recommend is every day go back the previous month. So today, go back and look to see who did you become friends with on June 1st. Whoever those people are, send them a message. And then tomorrow, who did you become friends with on June 2nd? And then send them a message. Try to wait 30 days before you send people a message, but I don't have a CRM to track all of that. Okay. The Mental Chewing Gum Podcast. I think this is my first time seeing you. Good to have you here. Been binge watching the channel. I got my logo almost done with my pro advisor and looking for my first client. I just don't feel I got the hands-on experience. I'm about to get the contract term. Also, your phone call temp. LOL, we need Trump to get rid of the IRS. If I have a little bit of experience, have a logo, I'm going to get your templates too. They're good. Okay, so here's the thing. That was a lot. So thank you for your comments. Here's the thing about getting experience. So you're never going to have enough experience to get started. It's just not going to happen. There's a couple things you can do. You can take an intro to accounting at a local community college if you want. You can take my course. I've got a course for sale. Buy it if you want. Don't buy it if you don't want to. You can watch a ton of YouTube videos. You can become a QuickBooks Online certified pro advisor, and you can track your personal finances through QuickBooks Online. So get a QuickBooks account and connect your personal bank account, your personal credit card to QuickBooks Online. That way you can practice doing the bookkeeping. You can practice categorizing your transactions, creating new chart of accounts, matching transfers, matching credit card payments, create invoices, create expenses, reconcile your accounts, look at your P&L. So you can practice being a bookkeeper, but you can also track your personal finances, which is really smart, which is really great. So you're kind of accomplishing two things at one time. So getting experience means making mistakes and learning from your mistakes. That's the important part. You're going to make mistakes and learn from your mistakes, and don't make the same mistake twice. That is getting experience. So as far as getting hands-on experience, it's just not going to happen. Just try to get a client, try to do your best, and make a couple mistakes, learn from those mistakes, and don't make the same mistake twice. Final option, you could try to get like an accounts payable or accounts receivable or like a part-time bookkeeping job. You could try to get $25 an hour, $30 an hour, work part-time for a few months for a small business if you want. That could be good experience. Not a long-term strategy, but it could be a good experience if you're struggling to get started. If you don't want to do that, you could also just be an outsourced bookkeeper and you just get your own clients. But there's a bunch of different options for you to learn and for you to get experience. You just need to never give up. That is the key. Have confidence that you can do it, because you absolutely can, and never give up. It doesn't matter what you do. It doesn't matter how you do it. It just matters that you do it. It just matters that you do something every day. Don't give up. Don't get discouraged. Keep working hard. It'll happen eventually. Okay, that's it. I appreciate all of you watching. Stay tuned. Every day at 11 a.m., I'm going to continue documenting my journey and sharing my experiences and my lessons learned. I appreciate all of you watching, and I will see you all tomorrow. Same time, same place. Have a great day.